You weren't supposed to see this. Not like this. Gold doesn't just jump 3% in a day. Silver doesn't explode 9% after a 3-day crash unless something underneath the surface is breaking or being moved. Because when metals move like this, it's not the market. It's not news. It's not coincidence. It's a signal. A coded message in price action that most people will scroll past without realizing they just witnessed a silent wealth transfer in real time. And listen, if you want real financial truths they don't teach, hit subscribe and turn on notifications. Like, you don't want to miss what's coming. Because what I'm about to tell you is not about gold. It's not even about silver. It's about control. It's about the hidden machine behind money and how it's tightening the trap right now. Today, headlines say it like it's normal. Gold up 3.3%. Silver zooms 9.23% after 3-day crash. They frame it like a sports score, like the market just woke up happy. But markets don't wake up happy. Markets are engineered, they are steered, and when you see a sudden violent rebound after a sharp crash, you have to ask one question: who was selling and who was buying? Because retail investors, the everyday person, they don't buy crashes. They panic inside them. They dump positions at the bottom. They freeze. They wait for the media to tell them it's safe again. That's how the herd has been programmed. Fear first, logic later. But whales, institutions, the people who actually run liquidity, they love crashes. A 3-day smash in silver isn't a drop. It's a clearance sale for the elite. It's a psychological operation. A liquidity trap disguised as volatility. They slam the price down hard enough to trigger stop losses, margin calls, emotional surrender. Then they scoop up what you threw away, and then they let it rip. That's what today feels like, not a rally, a retrieval. Because gold and silver are not just metals. They are mirrors. They reflect the health of the currency. They reflect trust. And right now, trust is decaying. The dollar is not collapsing loudly. It's collapsing quietly, like a slow leak in a tire while you're still driving fast enough not to notice. Inflation isn't just higher prices. Inflation is a silent confiscation. A stealth tax that steals your future purchasing power one invisible percentage at a time. And the system is built so you blame the grocery store, not the central bank. That's the magic trick. But gold doesn't care about narratives. Gold doesn't care about politics. Gold is the oldest financial lie detector on earth. And when gold starts moving with urgency, it's because something is being priced in that you haven't been told yet. Something big. You have to understand the hidden cycle. Every major financial reset in history has the same rhythm. First, the currency gets debased. Then assets inflate. Then the public gets distracted. Then there's a shock, a crash, and a crisis. And during that chaos, wealth moves upward in silence. It's not an accident. It's architecture. The crash is never the end. It's the transfer. And silver is even more violent because silver is the metal of leverage. It's smaller, thinner markets, more industrial demand, more speculative emotion. When silver moves, it's like the market screaming without words. A 9% surge after a brutal dump is not random. It's the sound of insiders repositioning. So the question in the title, will the rally sustain? That's the wrong question. The real question is, what are they preparing for? Because the elites don't chase rallies. They create them. They don't react, they position, they accumulate when nobody wants it, and they distribute when everyone feels euphoric. That's the psychological battlefield. The human mind is the real chart. Fear controls money decisions, greed blinds intelligence, herd mentality turns adults into stampeding animals. And whales know it. They know exactly how much pain it takes before you sell. They know exactly how much hype it takes before you buy. They know exactly when you will break. They study your emotions like data points. That's why the media exists. Not to inform you, but to time you. They tell you gold is barbarous relic right before it rips higher. They tell you crypto is dead right before accumulation. They tell you the economy is fine right before layoffs. Or they tell you inflation is transitory right before your rent doubles. Narrative engineering. And here's the part that feels illegal to know. Most market moves are not price discovery. They are liquidity extraction. When gold crashed for 3 days, what happened? Stops got hit, weak hands folded, leverage got flushed. That creates liquidity, that creates supply. Then when enough supply is shaken loose, the floor disappears and price launches upward like today. Not because demand suddenly appeared, but because the sellers are gone. That's a trap. Retail thinks, oh no, I missed it. I have to buy now. FOMO activates and the machine smiles because now they can sell to you higher. That's the cycle. Crash to scare you out, pump to lure you back in. Repeat until you're drained. Now zoom out. Gold up 3.3%, silver up 9.23%. That's not just a bounce, that's a warning flare. Because metals are the anti-system asset. They are what people run to when trust collapses. And trust is the foundation of fiat money. Fiat only works if you believe. But belief is cracking. Debt is exploding. Governments can't stop spending. Central banks can't stop printing. The future is being mortgaged for the present. And the elites know the game is nearing a reset. Not a Hollywood reset, a silent repricing. A shift where assets revalue upward and cash revalues downward. Most people don't understand that money isn't wealth. Money is a claim. Gold is not a claim. It's an object. Silver is not a promise. It's a substance. Crypto is not physical, but it's outside traditional rails. That's why institutions hate it, until they can control it, and they are trying. Look at the pattern. Crypto whales move like sharks. They front-run narratives. They accumulate during fear. They dump during mania. They understand liquidity cycles the way farmers understand seasons. They know when the Fed pivots. They know when rates break something. They know when banks will wobble. They know when retail will panic. And they position. Gold and silver are part of that positioning because when the system gets unstable, capital runs to hard assets. But here's the twist. The elites don't buy gold because they fear collapse. They buy gold because they anticipate policy. They know the response to crisis is always the same. Print, stimulate, debase, every time. So gold isn't just a hedge against disaster. It's a hedge against the solution. That's the secret. The system creates the fire, then prints the water, and the currency dissolves in the process. And the public thinks the crisis was the problem, not the reaction. Now think about today's rally. A 3-day crash followed by an explosion higher. That's the exact signature of accumulation. That's insiders stepping in where retail stepped out. And silver's move is even more telling because silver is heavily manipulated through paper markets, futures contracts, synthetic supply, a mountain of claims against a much smaller physical base. Silver is one of the most distorted markets on Earth. So when silver surges like this, it's like pressure escaping a sealed container. Someone needed exposure, fast. Now, will it sustain? Listen carefully. Sustainability in markets isn't about vibes, it's about liquidity. If institutions are accumulating because they expect currency debasement, geopolitical stress, or financial instability, then the rally has fuel. But if this is just a short covering spike after a washout, then it can fade, and that's where most people get destroyed. They don't know the difference between a bounce and a regime change. They buy because it moved. They sell because it fell. They live inside the emotional loop. That's how you stay poor. The disciplined win. The emotional lose. Always. The elite lesson is simple but brutal. Markets are designed to harvest human psychology. They are not fair. They are not moral. They are not democratic. They are predatory. And metals are one of the few areas where the predator class still quietly positions because they know something the average investor doesn't. They know fiat is a story. And stories end, not suddenly, but silently. A slow reset. The kind where you wake up one day and realize your savings bought less, your wages didn't keep up, and assets have moved beyond your reach. And you wonder, how did this happen? It happened because you were watching the surface while they were moving underneath. Gold doesn't surge because of headlines. Gold surges because of fractures in the foundation. Silver doesn't explode because of excitement. Silver explodes because of stress. So here's the climax. What if this rally isn't about metals at all? What if it's the first tremor of a repricing cycle where real assets begin to detach from fake money? What if the crash was the trap and the surge was the signal that insiders are stepping into hard value before the next phase? Because once the herd realizes what's happening, it's already too late. That's how wealth transfers occur. Quietly, legally, predictably. Most people will never understand this. They'll call it volatility. They'll call it speculation. But you're starting to see the machine. The media will tell you it's safe when it's not. They'll tell you it's over when it's beginning. They'll tell you to panic at the bottom and celebrate at the top. And whales will keep feeding. So what do? You stop playing emotionally. You stop letting fear dictate action. You study cycles. You respect liquidity. You understand that the market is not your friend, it's your opponent. Gold and silver are flashing something right now. Not certainty, but awareness. A reminder that real value still exists, and the system is nervous about it. Because the more people wake up, the harder it is to control them, and that is the true battle. Not charts, not percentages, the mind. So I'll leave you with this. When gold rises after a crash, it's not just a rebound, it's a message. The question is, are you listening? Comment below. Do you think this rally is the start of something bigger? Or just another elite trap? And send this to someone who needs to hear it. Hit subscribe and turn on notifications, because what's coming next in these markets, most people won't be ready for. The final truth is simple. The money you see is not the game. The game is who controls what you believe money is.